This is a list from startupmag.co.uk. This is the top 65 EIS funds in the UK right now. You'll find the list with contact details and a full guide. EIS funds provide significant tax relief and diversification into high growth companies, potentially driving significant financial returns. They also support the growth of the most innovative startups in the UK. This resource starts with a list of active EIS funds and continues with an in-depth guide to help you navigate the UK EIS fund ecosystem. So first of all, the page starts with 65 of the most active EIS funds in the UK. You get the location, the website, LinkedIn and Twitter. You can scroll down. You can see there's 65 and then there's a link to another 342. So that's the total list of VC funds in the UK on the database. Then the article heads over to what is an EIS fund. Here you'll find an in-depth and detailed, which means exactly the same, information about EIS. So what is an EIS fund? How does an EIS work? So in 6 steps. How do you qualify for EIS? Should I invest in EIS? How long do I need to hold EIS shares? What is the 7-year rule? Can I invest in my own EIS company? And what is the maximum tax relief for EIS? What is the average return on EIS? So let's dig in. An EIS fund, or Enterprise Investment Scheme Fund, is a type of investment fund in the UK that promotes investment in small early stage companies that might otherwise struggle to raise capital. EIS funds offer significant tax advantages to incentivize this investment. This fund operates under the rules set by HMRC. Here are the key benefits of an EIS fund, including all the numbers. Income tax relief. Investors can claim income tax relief of 30% on the amount invested. For example, if you invest £10,000, you could reduce your income tax bill by £3,000. Then we have capital gains tax relief, CGT. If the EIS shares are held for at least 3 years from the date of issue or from the date the company starts trading if later, any gain on their disposal will be free from CGT. For example, if you bought shares for £10,000 and sold them for £20,000 3 years later, you wouldn't pay any capital gains tax on the £10,000 profit. Then you have loss relief. So if the EIS investment results in a loss, you can elect to offset this loss against your income tax rather than your capital gains tax. For instance, if you've invested £10,000 and sold your shares for £5,000, you could claim a loss of £5,000. If you're a higher rate taxpayer of 40%, you could get £2,000 back. That's £5,000 times 40%. You also have inheritance tax relief. EIS investments are generally free from inheritance tax if they've been held for at least 2 years at the time of death. Capital gains tax deferral. You can defer a capital gain incurred on a different investment by reinvested the gain into EIS shares. For example, if you made a £10,000 gain on selling a property, you could defer the tax on this gain by reinvesting the £10,000 into EIS shares. Investment limit. There is a limit. The maximum amount an individual can invest in EIS qualifying companies in a tax year is £1 million. This limit is £2 million, provided that anything above the £1 million is invested in knowledge incentive companies. So how does an EIS work in 6 steps? The EIS works by offering tax relief to investors who purchase shares in small and medium-sized businesses. It's a government scheme in the UK designed to encourage investment in higher risk trading companies that might otherwise struggle to raise finance. So here's how it works. Step 1, investing in an EIS eligible company. Suppose you found a small innovative company that you'd like to invest in and it qualifies for EIS. You decide to invest £10,000 in this company by purchasing its shares. Step 2, you claim income tax relief. One of the most significant benefits of EIS is 30% income tax relief. So in your £10,000 investment, you can claim back £3,000 on your income tax bill for that year. This effectively reduces at-risk capital of your investment from $10,000 to $7,000. So that's $10,000 minus $3,000. You then need to hold the investment in step 3. So to qualify for EIS tax relief, you must hold the EIS shares for a minimum period of 3 years from the date of issue. If you sell your shares beyond this period, you would typically, before this period, you would typically lose the EIS tax relief. Step 4, selling the investment. This is in a profit scenario. In a profit scenario, after holding the shares for 3 years, suppose you sell your shares for 20,000, giving you a profit of 10,000. Thanks to EIS, you do not have to pay any capital gains on this profit. Now, if you're selling the investment in a loss scenario, if the company doesn't do well and you end up selling your shares for £5,000, so it means you have a loss of 5,000, you can claim a loss relief. So for a higher tax rate payer, 40%, this could mean claiming back 2,000, reducing on net loss to 3,000. And finally, in step 3, you have inheritance tax relief. If you hold the EIS shares until death, they would typically be free from inheritance tax. This can significantly benefit for estate planning. So, how do you qualify for EIS? For companies, the company must be unquoted, so not listed on any recognized stock exchange at the time of shares are issued, though they may become quoted later. 2. The company must have fewer than 250 full-time employees. 3. It must have gross assets not exceeding 15 million before the share issue and 16 million immediately afterward. 4. It should not be controlled by another company. 5. The company must carry on a qualifying trade. Certain trades such as banking, farming, and property development are excluded. 6. The company must not have been traded for more than 7 years. So 10 years in the case of a knowledge-intensive company. And for investors, you must be an individual, not a company, and purchase new shares in an EIS-eligible company. You can't be connected to the company, meaning you can't be an employee, a paid director, or own more than 30% of the company's shares, voting rights, or rights to assets in a winding up. Some unpaid directors may still qualify for EIS tax reliefs. You must hold the EIS shares for a minimum of 3 years to retain the tax benefits. So, should I invest in EIS? This is always going to be a personal decision. However, here are a few things you might want to consider when deciding whether to invest in EIS. What is your risk tolerance? So first, EIS investments are high risk. You must be comfortable with the possibility that you might use your investment. Are your investments diversified? It's generally recommended to have a diversified investment portfolio. EIS investments can be a part of a balanced portfolio, but should not be the entirety of it due to the risk profile. What are your liquidity needs? EIS investments should be viewed as long-term investments because they must be held for a minimum of 3 years to retain the tax relief. Furthermore, even after 3 years, it might not be easy to sell your shares if you need to, as smaller companies are not listed on major stock exchanges. Tax planning. The main advantage of EIS investments is the tax benefits. If you don't have a significant income tax liability, or if you don't stand to benefit from other tax reliefs, then EIS investments might not be advantageous for you. And finally, always seek independent tax advice. Due to the complexities and risks associated with EIS investments, it's recommended to seek advice from a financial advisor before investing. And to finish off this article, here are frequently asked questions about EIS funds. Number 1, how long do I need to hold EIS shares? So this is the 3-year rule. We talked about it earlier in the article, but in a nutshell, the 3-year rule is in EIS in the UK refers to the minimum period that an investor must hold their EIS shares to retain tax relief offered by the scheme. So that's the 3-year rule. What is the 7-year rule? The 7-year rule stipulates that companies seeking EIS investments must not have been traded for more than 7 years from the date of the first commercial sale. However, for knowledge-intensive companies, this rule is extended to 10 years. Can I invest in my own EIS? Generally, you cannot. To be eligible, you should not be connected with a company, meaning you should not be an employee, a partner, or a paid director. What is the maximum tax relief for EIS? The maximum income tax for EIS in the UK is 30% of the amount invested, up to an investor of 1 million in the tax year, or 2 million, provided that anything above 1 million is invested in knowledge-intensive companies. This means that maximum income tax relief in the year could be 300,000 or 600,000 respectively. There's also potential for capital gains, tax relief, loss relief, and inheritance tax relief. What is the average return on EIS? There is no standard average return on investments in EIS. This is startup investing. Some will be times 100 on your investment, and sometimes you'll lose everything. High risk, high returns if you get it right. So that's for this list, top 65 EIS funds in the UK, and that is on startupmag.co.uk.